Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. I'm going to go into the comment section on YouTube just to kind of give my opinions on some of the comments and give my, my outlook or my financial opinion, I'll call it, on kind of my approach. I know my approach is different than others, but that's why I developed my approach. You can obviously have your approach. It's going to vary with each person. And I'm going to give you, I'll just ask questions and throw questions back at you guys on perhaps the approach that you're applying. So one of the things that somebody said, and I'll just kind of chat it up here. It says, to declare, I'm not declaring that copper's in a bull market. I just said that copper is looking bullish now, is what I meant by that. But either way, it says, copper's in a bull market when it's under its 150, 200-day moving averages would be more than a little suspect. And then it says, Andy's loss is mine, but that's been obvious all year, although I'm up 50% year to date on my portfolio. But this is what separates me, perhaps, versus others. This here is a technical analysis comment. To declare copper in a bull market when it's under its 150. I don't care. Copper is in a bull market. If I were to pull up copper and look at copper. So copper's been in this bull market here. And yeah, maybe you could say it's got this big, large pullback here. The way that I view it is when you break a large pattern, when you break this large pattern here, this is number 1, number 2, number 3 hump of a consolidation period. This is a bull market. This is a pullback within a bull market. That is the way that I define it. And it's okay if others define it differently. But that's the way that I view this. So anything past this breakout is a buying opportunity on a move that's going to go higher. And why am I confident that this move is going to go higher? Is it because technical analysis? Is it because of people and the herd mentality creating these patterns? Guys, the patterns don't matter. That's not what is driving the underlying factors here. Technical analysis isn't the end-all be-all. And I know that I go over these like daily updates, and a lot of people like the daily updates. They prefer that I do daily updates. And I am more or less a function I'm a derivative of somewhat of what the viewers want. Now, if you're an incredibly good investor and you're a contrarian investor taking bets that people don't know about, you can create a YouTube channel and not a lot of people are going to watch it because by definition, you're contrarian. And the people who make all the money are the people who are probably going to be watched the least in terms of topics in the markets. What YouTube does in general is it turns everybody, not everybody, it turns a lot of people into those that chase news because that's where the views are at. So if you want to become a really good investor, you have to look deeper than charts, in my opinion. Charts are a function of humans interacting with each other that create these patterns. It's the herd mentality. That is what these charts are creating. But what is creating the herd to behave and make those charts? That's the root of the thing that you want to solve. So what I've done is I've developed a strategy where I've looked at history and the data. And you look at the history, you look at the data, you look at those things, and you develop something where you're front running the charts to some degree. To some degree, you're front running the herd. You're front running the money flows. The charts are a resultant of humans interacting with each other given certain market conditions. I'll say that one more time. The charts are a function of humans interacting with each other given certain market conditions. And I'll give some examples here, all right? Everyone, well, a lot of people that watch, they probably have jobs. All right. What makes a job fun and what makes a job miserable? Well, it depends on the conditions that you are subjected to under that employment. Do you have a good boss? Is it fun working there? Do you have a lot of frustrations? Are you successful? And that can depend on a bunch of different things. Sometimes the success that a manager is measuring you by is out of your control. And if it's out of your control, well, you have no control over that outcome. So for instance, if you encounter, I'm just going to make up things, you're manufacturing parts in a building, and your success is measured off of the efficiency of how you produce parts and hitting on-time delivery. But what if you encounter a lot of part shortages? And management says, we want you to go build all of those things. And they're short parts. We don't care. Go build it. So when you go and you build all these different things, what you end up doing if you don't have all the parts is you start building things out of order. You start building things in a manner that is far less efficient, and your on-time delivery is impacted. But a lot of those things are out of your control. They're not necessarily in your control. You can make the case that, hey, look, we didn't have all the parts. It's impacting these metrics. And they'll say, we don't care. This is what you're measured by. Go pound sand. I'm just giving an example here. So there are things that are within your control. There's things that are not within your control. And it's the conditions that sets the success of you working at that company. It's the conditions that are, in my opinion, that are driving the way that these patterns are being created. So copper's not going up because of the pattern. The copper right here isn't going, it didn't consolidate in this pattern here because the pattern and the people creating this pattern just happened to create it. The fundamentals created this pattern. The fundamentals are technicals, and the technicals are fundamentals. They are interchangeable. They are creating these patterns, and the humans interacting with each other about those fundamentals are creating the technicals. So if someone were to say, why am I bullish on copper? It's been in a bull market since, I would say, you could technically say it's 2016 with a higher low. You could also say here because you broke out of the consolidation pattern. We're in a bull market as we go up here, and the pullback is a function of the herd trading with each other and encountering resistance within a larger secular bull market. This is a cyclical pullback. Now, when you look at this stuff, I don't invest based off of just technicals. I go off of the fundamentals, which is inventory. I look at market deficits. I'm basically one massive hybrid investor. Hybrid being, I like fundamentals, I like technicals, and I don't know why anyone would use one or the other. They should combine and use both. So that's what I look for in these charts. Is it's a combination of fundamentals, technicals, the market deficits, all those different things. I'm not just a technical analysis, person that's trying to just trade on technicals. I know a lot of people try to do that, but I think they're far less successful in terms of their returns because they're just looking at how humans are interacting with each other and they don't understand why. If you understand why the humans are creating these patterns, that is the driver. You want to go all the way to the driver and understand the drivers in the market. And you're probably asking, well, what are those drivers? And that's what the thesis of the channel is. It's looking at the drivers, at least what I thought or think are the drivers of these patterns and these large consolidation periods. So when you enter a new paradigm, when you enter the business cycle of a new state, you go from a recovery phase to an expansion phase. And the business cycle and the real estate cycle are the same thing. They're intertwined. It's an expansion of credit. That's all it is. You look at things differently. So when you look at this, copper was in a recovery phase in that phase there, this entire phase. Now it's out of that phase, and we're going into another different phase, at least from the business cycle. And the secular bull market in commodities is going to span over multiple business cycles. So you're looking at secular cycles versus cyclical cycles. Bigger long-term cycles over, and then shorter cycles within it. Now, if you're trying to time all these little moves, like you're trying to time this move and this move and this move and this move, guys, I don't know. That just seems ridiculous to me. It just seems ridiculous to me to try to time all those moves using technical analysis, and basically in the short term, I think that the charts become a little less reliable. Now, if someone had loaded up, let's say they knew this, they loaded up in this bottom here, they loaded up here, they loaded up here, and let's say they added a little bit along the way. You made your core position here, and you came on up. Yeah, maybe you thought this was the bottom. You bought a little bit, you came in down. You buy a little bit, it went down on you, you buy some here, you buy some here. I mean, is this really going to matter if the price of this goes to, something that goes somewhere like up here? Does that really matter then? And you bought all of these different areas and you're just holding on. Now, I understand some people are going to say, well, how do you know it's going to go up there? What makes you think that copper is going to go that high? And I think that's what people lack. They lack the vision. They lack the ability to see, maybe perhaps, or understand the conditions, market conditions that potentially could be 2, 3, 4, 5, 6, 7, 8, 9, 10 years from now. And if we get into a scenario where oil becomes a lot less, or I should say a lot more scarce, and we try to go into and transition into this new, we'll call it renewable world, or electric vehicles, renewables, things that are much more copper intense. And you look at the deficits out in the future at 2030. You take the big picture view. You get this vision, you get the big picture view, and you say, man, we are going to be short copper way out there. The ore grades are declining, all of these different things. And then what you want to do is you want to put together a strategy to try to invest around that. Now, if you think copper is going to be in short supply out in the future, and that's what the data is suggesting, that's what we're seeing in inventories. Inventories are declining. You get this big, gigantic, what I call it, confluence of information. The confluence of information is that everything that you look at, it's all interconnected. It's all intertied. Everything here is all, we're like this, looking at it. And when you're looking at little short-term charts, you're just looking at little snippets, right? Nothing's tied together. Now, what if the copper chart mimics a tin chart, which mimics an oil chart, which mimics the financials, which mimics the real estate cycle, which all ties together and shows one big picture? It's one big puzzle that you're piecing together, and it shows this big picture, which is basically the thesis of the channel. And as things progress and go through, and I don't know if the way that I've looked at it in the data that I've seen in the past, these cycles are interconnected. I've never seen some of these cycles basically run without some sort of interconnectedness. And at least that's what I've seen with the data. I mean, maybe you'll see it in a few different things, but we could be coming up to a time that is different. It could be. I don't know. I know those words are definitely not well received. When people talk like this time is different, it's definitely not well received. But I will say that it's harder to get commodities, just flat out. Ore grades are declining. That is an irrefutable statement. That is a given. It takes more energy to extract copper and to extract silver in the future with much lower ore grades than it does a few years, 10, 20 years ago, with much higher ore grades. Now, the efficiency we extracted out, there could be new technologies. I understand that. And at some point, we're going to be mining dust. I mean, that's really what it is. It's going to be dust. So if you have a viewpoint that's like that, then why would I be selling and trading any of these? Why would the short-term movements even matter? If you've got this big framework and the market conditions are positive for this to work in the future, I just take the big long-term hold. I look at these fluctuations in prices and try to time my buys as best you can. Now, Warren Buffett, Peter Lynch, all these really good investors, you know what they say? Take a super long time frame. Who am I to say that these guys are wrong? I think they're probably right. And they take very long time frames. They buy companies at good prices, that which they think are at good value, and then they hold on to them. At that point, the fundamentals are what are driving these companies. It's not the technicals. The technicals are just validating that the fundamentals are working. So the real question that I think a lot of people should be asking is, am I a technical analysis trader? Not me, but are you a technical analysis trader? Or are you a fundamental trader? Or are you a hybrid of both? I'm a hybrid of both. So I see a lot of people, they'll say that someone's right or someone's wrong, or they're trying to make a call. And in all honesty, guys, I don't really care. Like, it does not matter to me if someone times a short-term call. It doesn't matter. I don't care. I mean, we're going to see 40, 50% pullbacks in this bull market. That is a given. Are you going to try to avoid that and get caught out of it? I mean, that's a decision that you're going to have to make on how you want to try to do this. On some of these stocks, you'll get 7, 8, 9, 10, 50% pullbacks on the way up of the bull market. You're going to try to time all of those correctly. And if you mess it up and it runs and it doesn't have that pullback that you thought, what are you going to do then? You know, there's technical, I mean, you can use technical analysis. You can try to time this stuff the best you can. And even though I may see a setup that could potentially go lower, selling out of the stock might still be the wrong thing to do. Why is that? Why would, if we see a topping pattern, it would be the wrong thing to do? Because if you don't get back in, if you mess it up and you don't get back in and you're in a monster bull market, you could miss out on a lot of gains. And I know a lot of people say, oh, well, you know, having it pull back on you, and they say all these different sayings. I don't believe it. I don't believe it. What they are basically saying is they don't understand what they're invested in, period. They don't know the fundamentals. They don't know the market deficits. They don't know what they have. They're just using technicals and trying to time the market. And none of these guys that I know that are market timers are billionaires. So I'm using these guys that are billionaires as my mentors. I'm looking and saying, well, what do they do that's successful with them? Who am I to say that these guys are wrong and they've got billions of dollars making it through investments in the market, and they're all saying, take a big long time frame. Don't try to time the market. Now, I'm trying to time these cyclical ones with the macro picture, but this is looking at it from a 5-10 year time frame plus. This isn't looking at it from a 6 months or 3 month window. So I think that is very difficult to do, and I don't think a lot of these people get it right by taking these short, market timeframes. So someone can say, and I'm just going to make an example, Andy, you're wrong, and the market's going to pull back. The market is going to pull back, and it's going to go down by 30%, 40%, 50%, whatever it is, right? And let's say they're right. The question you should ask yourself is, should you lose your position on a possibility? That's the question. Should you sell out with the possibility of a decline of what the human, the technical chart says, if you're in a monster bull market? In my opinion, I'm not going to lose my position. I think that is the wrong way to approach it. And what happens is, and I'll just kind of explain. If I'm in oil and I bought oil, I got the bottom. I bought it when oil was $20 a barrel. These companies look like they're all going bankrupt, and I buy a bunch of the stock in it. Right? I'm riding this thing higher. I'm up many multiples on my initial investments. 10 times, 15 times, 20 times, 30 times my money. And someone says, "Hey, look, oil could pull back." Okay, what's the cost curve of oil? Oh, it's the high cost producers around $100 a barrel. And that could increase, and they're having difficulties with supply chains to keep up. You look out in the future, okay, what about all these other metals that they use in a lot of the pipes and all these other things that they use? Oh, well, that's all going to be short. Interesting. We've got diesel shortages. We've got all these different things in the market. Really, that could screw up supply chain. That could even slow down the oil companies. Now, all these market conditions are out there. We can see them. We're gathering this data. We're looking at it. So if I think that oil could eventually go somewhere way north of $80, $90, $100, if I think it could go, I'm just going to make up a number, 200 or 250. If I think that oil could go to that level, why would I be hyper analyzing the path that it takes? If I think it's going to go up there, why would I chance a potential pullback at $110, $100, which could pull back to 80 or 75? Why would I chance that? Put in the comment section why I would chance that. What am I going to gain by trying to time that movement? And what if they get it wrong? What if the person who's trying to time that movement gets it wrong and we rock it up to 150, which could happen very quickly? So, I mean, those are the things that I've thought about when I developed the strategy in the beginning of this whole thing of how to approach this. I buy low, I hold on for the bull market. I buy on pullbacks. That's the strategy. It's that simple. I can go to work. I don't have to worry about timing this stuff. I don't have to watch the stocks all day. I can go do things. If something happens, I got to go wipe a kid's butt. I'm not going to be sitting there worrying and sweating about it. Make sense? So I know a lot of people, they're trying to time all this. They're like, oh, you can't call this a bull market. It's in a bull market, guys. It's in a bull market. And it's going to go higher, in my opinion. Copper, oil, all these different things as we progress. Now, the inflation, the baby boomers coming into retirement age and collecting Social Security, and the deficits that are going to be ran when they get paid out in Social Security, and the deficits from the higher interest rates, all of that stuff is going to add to what I think is an inflationary period. Now, obviously, it's all my financial opinions here. I'm just using the charts to kind of validate that we are still moving in the upward direction. And with the inventories out there and all that stuff, it looks good to me over the long term. So I just want to kind of clear that up, let you guys know what my approaches and strategies are. And if you guys agree with the strategies and the approaches, I've got a lot of really good companies that I've looked at with a lot of leverage to the price move. That could be good or bad. It's going to be very volatile as you hold on to them. Your account portfolio is going to go all over the place. But I can tell you, if you can harness that energy to the upside, your returns will be insane. And you know what? There's going to be times that we may go down. We may have a recession in the middle of this bull market, which is highly likely. We've seen multiple recessions generally in these big commodity bull markets, either 1, 2, or 3, something like that. So if you guys want to join the community, definitely join the finding-value.com, the platinum membership. You can see my portfolio. I go over a lot of companies with the platinum question and answer sessions. I state a lot of things similar to what we're doing here. And you guys can ask questions. You can ask whatever you want. But that's my strategy. That's my approach. And when I say, hey, look, copper looks good, I'm looking at it from a short-term perspective. And I'm a pretty simple technical analysis guy. We're breaking this downtrend line to the upside. And I'm seeing a lot of confluence. Confluence is the merging of things coming together. where a lot of these diversified mining companies are setting up patterns and breaking to the upside. They're bouncing off supports. It is matching what the copper chart is doing. I'm also looking at candlestick patterns and all those other things. I am early. I'm the guy who buys early and gets the multi-baggers. I don't wait for a breakout of a 200-day moving average. I don't wait for other things. I've got other leading indicators that I look at in the markets to get me in earlier. And you know what? Sometimes it doesn't work out. That's why we use portfolio allocation strategies to limit risk if you get something wrong. That's why you go after cash flow generators. You keep speculative stocks minimized. You don't need to go ballistic on them, in my opinion. And again, guys, this isn't advice. It's just my opinion, what I'm doing. So that's how I'm doing it. I'm not waiting for 200-day, moving average breakouts. I'm not waiting for those things. Why? Because I know the fundamentals. In my opinion, copper, we cannot have the world that people are envisioning in the future and have the copper price be at $3.50, in my opinion. So every time I look at this, if we break any downtrend, if we have patterns that we're breaking to the upside, which we've got a pattern breaking to the upside on a large, big breakout, we've broken the downtrend line, I'm a buyer here. I'm not sitting around twiddling my thumbs. Let's wait for the 200-day moving average to be broken. It's technically not here. Guys, it doesn't matter to me. All right. I'm going in. That's my strategy, because inventories and the vision and me believing that I don't think we're going to be at $3.50 and have a massive shortage in copper and have that price be the same. That's my take on it. All right, guys, that's all I've got. We'll catch everyone who's on the website 5 p.m. Mountain Standard Time Sunday. Sunday, that's 12. I don't even know the date. And I'll put that on the website for everybody. That is 12/6. 12/6, 5 p.m. Mountain Standard Time. We'll see everyone there, and we can talk about a whole bunch of different companies and how to play this. All right, guys, we'll catch you later. It's Finding Value.